Yes, welcome back to my YouTube channel. This is Watch along with Elijah Ebong. So today I will be taking you through some of the income tax amendments that have been assented into law by the President, and one of them includes repealing of the Section 27A of the Income Tax Act. That Section 27 was previously talking about initial allowance of 50%, whereby if a taxpayer places an asset of eligible property into use for the first time, they could be allowed to claim initial allowance or to deduct initial allowance of 50% if that asset is placed into use for the first time outside the radius of 50 kilometers from Kampala. So that section has been repealed. Repealed under the Income Tax Act means it has been officially cancelled, meaning there is no more initial allowance in the Income Tax Act, and that is already into law. So it has been implemented effective 1st July 2023. Then number two, withholding tax on incomes from winnings of betting has also been amended to remove incomes from winnings from gaming. So if someone gambles through a game, for example horse racing, and they win money, there is no more withholding tax on that income. That has been removed, but there is only withholding tax of 15% on winnings from betting. So when you win a betting ticket of 1 million, they deduct tax from you of 15%, and then the betting company can pay you the balance. And then another pertinent point is taxation of income of digital service providers. Now, digital service providers have been defined as those people who provide services under the online, using an online network. For example, there are so many categories which have been placed under digital service providers. One is data warehousing, online marketing, advertisement online, in an internet service provider like Facebook, Google, WhatsApp. So the income tax has been applied at a rate of 5% of the gross amount of the sales of those people here in Uganda, of the services consumed, service revenue. So if, for example, Facebook earns service revenue in Uganda, they are supposed to pay income tax of 5% to URA at the end of the tax period. So that has also been introduced into law, and it's a very crucial issue. Then another issue that has been introduced into law under the Income Tax Act is a restriction of carry forward losses. Now, carry forward losses mean that someone who makes a loss in his business, meaning a loss is chargeable, taxable income minus allowable deductions. So when there is a loss, it means that that person has an assessed loss, so they can carry forward a loss to the following year and reduce it on their income tax liability. So assessed losses have been, there is an amendment that a taxable person who makes losses for a period of 7 years can only be, who carries assessed losses for a period of 7 years can only be allowed to claim 50% of the carry forward loss in the subsequent years of income. So if it was initially 5%, the first bill, but the act now has been amended to at least provide for 7 years. So it means that those people who invest heavily into machinery like mining, industrial parks and manufacturing, so much heavy machinery, they always make losses for a significant period of time before they start making profit. So those people normally carry forward losses. So it means they don't pay tax to URA until they make a profit, because you only pay tax to URA at the end of the year when you make a profit. So that loss being carried forward has been restricted to 7 years. You can carry forward losses, and after 7 years you can only be allowed a loss of 50% of the amount of the carry forward loss. So those are some of the issues that are really important and which need attention in the Income Tax Act. So initial allowance, don't forget, taxation of digital service providers, restriction of carry forward losses, and finally an issue of filing income tax returns in US dollars for digital service providers. So digital service providers are also not allowed deductions under the law. So once they provide services to Ugandans, they do not have any expenses that are going to be deducted under the law. So all the income is charged 5% income tax, no deductions allowed, 5% is the final tax, and they are allowed to file returns in US dollars. So meaning, if Google makes money in Uganda and they are supposed to pay 5% to URA, they can file the returns in US dollars and pay URA in US dollars. So that provision has been provided for to cater for digital service providers, so that they file returns in the currency which they trade in, because they predominantly trade in US dollars. So I believe with those key insights, you are able to understand some of the new regulations of the Income Tax Act.